Good morning. It's great to have your company this Tuesday, the 29th of December. I'm Jessica Amir, a market analyst at Bell Direct. Well, the Aussie share market looks like it'll kick off the shortest and last trading week of the year on solid footing. The futures are suggesting a 0.5% lift at the open. Now, it comes as European markets closed higher on Monday and US equities roared to a brand new record closing high for two key reasons. First, the US President Donald Trump unexpectedly signed yesterday that $900 billion COVID-19 relief bill into law that includes paying most Americans $600. Now, the second reason equities rallied overnight was that the UK is expected to approve the Oxford-Astra Zeneca COVID vaccine this week. Now, this all supports stocks and, of course, that V-shaped economic recovery. The S&P 500 rose 0.9%. It was up by about 1% earlier, though. The Dow Jones up by 0.6%. The tech-heavy Nasdaq ending 0.8% higher. As for the sectors, communications companies saw the biggest rally, rising about 2% after being heavily sold down across the globe this year, while consumer discretionary and tech sectors also made strong gains. As for standout stocks, though, Apple shares rose 3.5% to a brand new record high on reports that Apple could be making a self-driving car in 2024. Bank stocks also did well, like Visa, Goldman Sachs and American Express, rising about 1% each. As for commodities, the screens were mixed. The oil price lost about 1% to $47.70 US as supply looks set to increase as OPEC will boost output by 500,000 barrels per day in January, and Russia wants to increase their output by about the same amount in February. So expect some selling today in oil stocks as the price will likely continue to come under pressure given there's of course less demand. And the iron ore price lifted by 0.2% to $155, a new high after clocking up about 68% this year. So expect some iron ore major buying today to continue in the likes of FMG, Rio Tinto and BHP. On the smaller side of town, expect some buying today in Mount Gibson Iron, Legacy Iron, Magnetite Mines and Iron Road, which are all in bullish charting areas if you look at their charts as well. And inversely, expect selling today in gold stocks as the safe haven came under pressure again, falling from its 1 week high. It's down about 0.3% to $1,877 US an ounce as US stimulus is being rolled out. Now, gold hit a record of $2,069 US back in August, but it's since pulled back on vaccine hopes and a stronger than expected economic recovery. But remember, the gold price is up 24% this year, and there is a bit of a lack of confidence around that the gold price will bounce back above its fresh high of $1,924. So keep that in mind. What else to watch? Well, there's no economic news out today, but all eyes will be on local company news and overseas. I'd be watching if the US House vote on increasing this $600 payout to Americans to $2,000. It's not expected to go through, but if it does, expect the downbeaten parts of the market to see some extra buying today on the ASX and in the US overnight. Trading ideas, FMG was reiterated as a UBS buy with a target of $24. There's been a recent landslide in the Brazilian major Vale's mine, and Brazil is about to enter their wet season. Now, this means the iron ore price could further increase. UBS also reiterated CSL as a buy with a $346 target, and it could also be worthwhile checking in with travel and tourism stocks and how they're going. Qantas, which has pulled back from its fresh high, looks likely to rally once travel restrictions ease, and Qantas is a buy stock for many of the majors, including UBS and Morgan Stanley, as its outlook looks stronger than expected, and the upper price target for Qantas is $6.20. Lastly, keep an eye on Resimac Group, M-Vision Medical and People Infrastructure. All three are showing strong bullish charting signals according to Trading Central. I'm Jessica Amir with Bell Direct. Stay safe. Happy trading.